Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to the Chaos. My name is Brad. That is Fat Man Zoom. It's Stock Watch Sunday, Fat Man Zoom. How you feel, my man?
I feel good. Got my bright white on. I mean, could this thing get any brighter?
It is pretty bright. I didn't realize how bright it was on camera.
It's glowing.
I feel like it's brighter on camera than it actually is in person.
Real life.
Yeah.
It's like a little halo. No, I'm feeling good, man. I'm excited. I got some news that I feel like we should share because I am so excited. But first, let me shout out our starting five. We got team coaching, Alan 316, Rudy Brown, Jason Padilla, and Ross Matthews.
Appreciate you guys being the early one showing up.
So I'm looking at the screen and I see that little purple light in the back, the Ravens purple.
It's pretty dope.
I'm excited because I came in here yesterday and finalized the deal where we have a local Baltimore artist, Vinny Hager, who's going to come in and paint a mural on that wall.
And I cannot freaking wait.
Yeah,
it's
I'm
gonna
excited.
be like the work that he does is absolutely incredible. I can't wait for you guys to see it. We'll, I'm sure, post it all over the place. So I'm super pumped. Just another huge addition to the studio, and you guys have been a huge part of that and supporting that. So we appreciate you guys too. Yeah,
it's going to be a nice little ad. I'm not going to give any details. We're just going to reveal it, and you guys will see what it is. Hopefully, it looks badass, but we've been talking about that wall for a while, so I think it's going to fill out. So it's going to be cool. So excited about that. Excited about the week in the market.
Yeah, man.
And our topic today, we're changing it up a little bit.
We are changing up a little bit, and we're talking about 10 tech stocks that have just kind of been beaten down that we think could potentially be worth kind of working our way back into and might actually end up having a pretty decent second half of the year.
Yeah, our impetus behind this video or this topic was really the fact, a lot of people had been getting their ass handed to them by tech.
Yeah.
And we talked about the rotation. We talked about making sure that you're well diversified. But we feel like we need to make sure that we present opportunities, and you don't want to be in you don't want to be out of the game for when tech moves back. So while you still need to be well diversified, there's some stocks that we think you should consider and potentially, or there's some stocks that we're considering. I hate when I do that. And we feel like we should get some exposure to now and then potentially scale and add on. And that's the one thing is just to consider, like, what we're saying about this is we're still going to stay well diversified. We're not getting away from the reopening plays. Yeah. For me, I think having that 25 to 30% exposure to tech, not over 50. I don't want any over 50% of my account in it, is going to be important. And then also just establishing starter positions or giving me freedom to add on, because we're not saying that these can't go down further. We just feel like they've kind of settled out, maybe present some opportunities.
Yeah, and I kind of wanted to just kind of piggyback off of some of the things you were saying. I think that we're still going to see some inflation, pockets of inflation, I should say. So still very heavily invested in the energy sector, the materials, all that stuff we still think is going to continue to go higher. But why not try and look for opportunities in tech, because eventually things are going to rotate back into those. Yeah. They're going to come down to fair values, and we think this list of 10 could potentially starting to get to that point.
Well, and we've talked about this with tech. When it does come back, it comes back with a vengeance.
Yeah.
And it's not like, the old value stocks. They come back and they're sort of steady climbers.
Right.
Zoom could go up 10% tomorrow.
Yes.
Before you blink.
Yeah. Yeah.
And so to be in it, to sort of establish sort of where you want your entry, but also hopefully benefit off the move would be beneficial. And we think that sort of our sentiments is really reflective of the overall sentiment of the economy, that while tech has gotten beaten down with reopening, we still are very bullish on the economy and the market, and we only feel like eventually the money's going to come flowing back into tech.
Yeah,
sooner than later.
Absolutely. And I think the important thing too, as we look at some of this stuff, we're looking at some things that were overvalued and could potentially still be fundamentally overvalued, but are growing so fast that they could grow into those valuations rather quickly. Just to kind of what you were talking about, things not wanting to chase something. If you see something like a Zoom or what have you jump 10%, even Peloton or whatever we've been talking about, jump 10, 20% within a few days' time, you don't want to be chasing that stuff. You want to just already be in. Yeah. So I think that's kind of where we're coming from with this thought and this notion. We'd love to hear from you guys too. Leave us some comments down below. Leave some comments in the chat. What are your thoughts on us, just kind of bringing this to you? We know there's all kinds of other noise in the market, but our focus is really kind of to get you guys to look at some things that everybody else isn't looking to. And that's really kind of where the real money is made, in my opinion.
Mm-hmm. Yeah, I agree. And there's going to be more content along these lines as well. So guys, always make sure you like and subscribe, hit that notification bell, because we go live, feels like every damn day. Now, we're live every Sunday at 7:30, but we're also live every Monday through Thursday, 3:30 p.m. Eastern time. And we always have videos coming out. So we got a lot of good content coming up. So excited for this week.
Let's do it. You ready?
Yeah. So let's talk about the top 10 beaten down tech stocks that we're looking at.
All right. So my first one is probably one that we haven't talked about this one in a while.
Yep.
And that's Salesforce. Salesforce has actually been beaten down since September and hasn't really come back since its inception into the S&P 500. They have earnings coming out on Thursday, so it's fitting that we're talking about tech stocks, and this is one that actually just so happens to have earnings. Their estimated earnings per share, 88 cents, and I actually have them coming in higher at 97 cents per share. Now, as we've learned over this particular earnings season, even if they beat, sometimes we haven't seen so much of a reaction. Now, that's changed a little bit in the last week and a half or so. We've seen some really good beats, and investors have reacted positively to them. So I think Salesforce is definitely poised to have that type of reaction if we see some good numbers from them, a good outlook, all that good stuff. And, they are, how do I put this? They're in the cloud computing space and this is the industry itself has just kind of been beaten down. And so for me, I like Salesforce because of, obviously we know how well known they are in the CRM or customer relationship management field, but I think that they are best in class. And we talk about getting into things that, are best in class, especially when things are volatile. But the other thing with Salesforce is this acquisition of Slack, I think, is underestimated and overlooked. I know that you have your feelings and thoughts on Slack in general, but I think
garbage.
Yeah, but I think there's definitely the concept of what Slack is, whether you like it or you don't. There's definitely this concept that I think that Salesforce could groom them a little bit more into what customer relations can look like in the future. And we've already heard from the shop CEO and how he loves the way of doing things, and how this style of or this platform that Slack has could be the email killer. Yeah. And so when you're looking at innovation and you're looking at growth, that I think that Salesforce is definitely something that could be a big key factor in the future, and especially with cloud computing and people. We've talked about how work from home is not going away, even though we think there could be this plateau. There could be more of a hybrid approach, which is probably the most likely situation. But we look at the chart here too, and this actually looks as if we could start to see this turn around. So I'm going to show you guys the chart here. I think that this move up over the 50-day moving average was pretty pivotal for Salesforce. And if we get this back up over that $230 mark, which has struggled with in the past, I think that this could spell some really good news for them from the chart. So technically speaking, I think it's set up to break out of this downtrend that we've seen from them. But man, I think that even though this is trading at a little bit of a higher multiple, when you look at the rest of the industry, it's actually right in line. So yeah. I think that Salesforce is a really good opportunity here.
Yeah, I like that call. I mean, Salesforce is going to come back, and not only they're best in class, but it's not even close.
Yeah.
Like the next competitor is
Right.
not even in the same stratosphere. So I feel good about that. The other thing I feel good about as far as Salesforce is concerned is their partnerships, and not talked about a lot, but their venture arm of their company invested in Snowflake.
Yep.
They've made a lot of really good investments, and they do a good job of identifying investments.
Yeah.
And that's sort of like a ancillary bonus for when you get into CRM. So I like that. That's a good call. Mine, I'm coming in hot. I'm coming in with one that is down nearly 50% since the end of January. And Kathy favorite.
Oh, man.
Palantir. My first two are actually cybersecurity, and I'll speak on it after the next one. But the reality is with Palantir, looks like it's trying to make a move back. It's actually in a pretty critical area, which you'll talk about the technical in a second. But guys, listen, I think part of the reason of understanding where the situation that Palantir is in, still a relatively new publicly traded company, and I think it's more of a victim of its own success and also victim of timing, where they've beat 3 quarters, but their rate of beat has diminished.
Yeah.
So they barely beat last quarter. They've had 3 earnings. The first earnings they beat by like 350%, then 180, then it was like 10%. I think that partly had something to do with it, but also the timing of the pandemic and just like all the other tech stocks that we saw that benefited off the pandemic, like the rate of growth and can they sustain it? We think they can.
Yeah.
I love the fact that they have exposure to government exposure. Like they're trying to build their commercial contracts, but really their money is made in government contracts, and that's the best kind of business you want.
Right.
And their government business, even though it was their core competency, still grew 83% year over year, Brad. So it shows that there's meat on the bone there, and Palantir is going to keep growing, and there's a reason why at every dip, Aunt Kathy keeps adding.
She adds a ton
Yeah.
to this, like religiously anytime there's a huge dip. So yeah, I mean, I know that Kathy Wood's kind of gotten, beaten up over the last, I would say 3-4 months, but she knows what she's talking about. We talk about how they have best in class analysts, and it's not even close. So we look at the chart here, and I think that we could also be potentially seeing, and I want to just use this term loosely when I say potentially, because we've already talked about how tech could be impacted here just moving forward, especially with rising rates and that sort of thing. But when you look at the trend here, there could potentially be, a possibility that this actually turns around. So if I were to actually draw a trend line here, we could see how this may be on a potential breakout. So if I see this break up above 2250, then this actually will be breaking this downtrend, and we could start to see a nice little move back up. So we'll continue to watch this, but I like the chart a lot. For me, the next one that I have is also one that's been beaten down nearly 50%, and that's Zoom. When we've talked about how Zoom it has really just been taking a hit, obviously it's done really well over the pandemic for a lot of reasons, but I think a lot of reasons that it got attention was because families were using them, and Zoom wasn't making any dollars directly off of families using them and that sort of thing, but they were gaining that exposure, and that exposure allowed them to do so many other things. It's kind of puzzling to me when I look at like the CEO of Uber, who makes $4 million plus a year.
Yeah.
The CEO of Zoom makes $950,000 last year in 2020.
Crazy.
So to me, when you look at this, and they actually have cash in the books, which is also refreshing. Yeah. And so to me, you look at this and yes, it got ahead of itself a little bit as far as the stock is concerned, but the company is still solid. It's still very, very good. They have, I just lost my way here. A global study by Zoom, 80% of respondents said that even after COVID-19 pandemic ends, virtual elements will still persist in their daily lives. 52% said they would still want to be in either a stay-at-home or hybrid approach. So that, in my opinion, and this is globally, in my opinion, is still going to be very much in play. Facebook hasn't deviated. Twitter hasn't deviated. A lot of these other bigger companies have not deviated from the remote work side of things, and Zoom is just only going to continue to grow better. Their last earnings were still incredible. Yeah. They have earnings coming up in early June, and I think that they actually do surprise a lot of people as well.
They're a victim of their own success as well.
Yeah.
The name of the game for them is the globalization of business. Their international growth was absolutely insane. And the only thing keeping this thing down is people's fear. The reality is that, like you said, it's not going anywhere.
Yeah.
Like video conferencing, stay at home, is not going anywhere. Even if people went back to work,
Right.
not going anywhere.
Right.
So I think that Zoom's growth is going to still be great this year. It's a tall order, but I think they're still going to crush it. And there's so much international exposure. And we've talked about the industries that they still haven't monetized, i.e. education, i.e. healthcare. And so I'm excited about that. And they also have other revenue stream opportunities down the pipeline.
Yeah, I mean, they also, as far as revenue streams that you were mentioning, Zoom Events has the capability to provide interactive virtual experiences with all of their other, I guess, features. And so that could be something, especially from a global standpoint, if you're a business who has employees globally, then this could be something big that would be another just revenue add for them, another feature that sets them apart from the rest. They are best in class as far as video conferencing is concerned, and you can make the argument that Teams could move in on them, but Teams is terrible for when most people
garbage as well.
Yeah. So you look at the chart here, and it's already started to make a little bit of a turnaround. Has not yet broken this trend either. This actually looks a lot like Palantir as far as the chart is concerned, but not so surprising as we've seen some of these make similar moves through the pandemic and such. So this actually just moved above the 50-day moving average 2 on the daily chart, and I think that if we get this above, I would say 350, and I know that's a long shot from where it's at, but given the fact that it bottomed out at 273 and made this move to 316, and kind of the point that we were talking about how some of these tech stocks have just really can make violent moves, I think that 350 is definitely within earshot. If it breaks over that, I think that we could start to see this move back up.
All right, Ross Matthews, I agree with you 100% when you say that you like Palantir, but you like CrowdStrike even better. And that is my next stock on the list is CrowdStrike. Regardless of where tech is going, cybersecurity is going to become more and more important. That is not going anywhere, and there's no doubt about that. Right. And so, to me, there needs to be a place in my portfolio for cybersecurity, and Palantir does that, but CrowdStrike is really the one that I like. They were down about 22%. They made a little bit of comeback recently, so they're not beaten down as much as the other ones on this list.
Yeah.
But I think there's a lot of room for that. Gartner Magic Quadrant just named them the the leader in endpoint cybersecurity, which I believe is the second year in a row of them receiving that recognition. Their subscription grew by 70% year over year. Again, if we can sustain that growth, that bodes really well for them. They had record numbers in revenue, operating income, free cash flow. So, like, the position they're in is beautiful. They reinvest some of that cash.
Yeah.
I think the sky's the limit for this company, and yes, it isn't beaten out as much, about 13%, I think, from its highs, but still, I think this stock has some huge upside.
Yeah, I mean, it actually looks really, really good. It definitely hasn't been beaten down as much. I think people are starting to realize that obviously that cybersecurity isn't going anywhere. The Colonial Pipeline certainly shed some more light on this as well. But when you talk about companies looking for this hybrid approach as far as remote work and working in the office, it still requires a lot of, security issues, or opens you up to a lot of security issues, I should say. I agree with you. This is actually getting ready to reverse as well. This is one that's actually remained bullish as far as the technical concerns. As far as the technicals are concerned, it's remained above the 200-day moving average and briefly fell below the 50-day, but now strongly above that. I think, with the earnings that we saw from Palo Alto last week, obviously, boded well for CrowdStrike as well. I think that this is going to continue to go up. I like it from here. If you're looking for a potential resistance break, we are pretty much right at it at 212. We've said that CrowdStrike was a buy under 200, and honestly, we've been calling CrowdStrike a buy under $80. But I think that at under $200, if by some chance it does end up falling below that, could be a good, decent grab for you.
Yeah.
So for me, my next one is going to be Snap. Snap has been one of those stocks that I've loved for a while. You and I have always talked about, Snap from down in the $20 range, and it even got a little bit ahead of itself as well. And I think that it's time to certainly take a second look at this, especially since it started to move a little bit more. When you look at Snap, they just came out with their augmented reality goggles, which Apple was talking about getting into this, and basically Snap ended up beating them to the punch. They already had the tech there as far as their filters and that sort of thing is concerned. And now that they have these goggles, they're pretty impressive. They have microphones, they have mapping capabilities, all kinds of other stuff. And if you guys don't understand what I'm talking about, these are basically give you this augmented reality in which you could try on clothes, you could see yourself in a vehicle, you could do all kinds of stuff, you can look at houses and that sort of thing. And this is kind of where technology is headed. This is where one of these trends are going. When we look at Snap, we've already talked about how 90% of the population between 18 and 24 have Snap on their phone. So I think that this is just going to continue to roll. And the only thing that had me kind of, I guess, iffy about these new glasses, first of all, they're not available for the public yet, just for developers, so they're still working on it. But the fact is that it's out. Yeah. And then for me too, I think that the fact that it's only in use for 30 minutes before the battery dies, it's kind of a bummer. So I think that as they're working through this with developers and that sort of thing, that'll probably iron itself out. But this is huge technology, and I think a lot of people don't really realize what exactly it means and how this could improve the company. And I think that's obvious. I think that's actually the benefit of Snap. When we look at the chart, it's just started to move back up over its 50-day. Not to say that it'll sustain over that, but I think that there's definitely promise here for a reversal in Snapchat.
Yeah, just knowing the story, the bear and the bull case of Snapchat, you get Snapchat if you want to take a chance on a company that's just going in a different direction and you think could continue to pave its own way. Yeah. You run the risk of, can they eventually be profitable? Yeah. Like sustain profitability. Right. And how they manage their finances. That's always going to be the concern, because you look at somebody like Facebook, and Facebook just has a pile of cash and it continues to grow. Yep. And they could just keep scooping up companies. But if I'm looking at anybody outside of Facebook, I feel more comfortable taking Snap than probably any of the other ones if I'm speculating. So that's a good call.
Yeah, man. I think that, Snap's trying to set themselves apart from their other social media counterparts, and I think that this augmented reality thing is probably something that could really do that for them, and I guess just carve out a space for them in the social media market.
So before we get on the next one, how many people we got in the house?
So we got 155 of you guys hanging out. So thanks for hanging out and allowing us to be a part of your Sunday evening. If you guys could hit that thumbs up, we certainly would appreciate it. And hit that subscribe button if you're not already.
So this ain't new. This next one ain't new. What I'm going to say isn't new. Isn't going to be surprising. But I'm just reaffirming the position of Airbnb.
Yes.
Guys, Airbnb is in comical levels. Now, could it go down further, Brad?
Yes, it can.
But look at any indicator of the industry, and we're about to be in like what did the CEO say? What did he say? Like I'm gonna sort of paraphrase, in the renaissance of the century.
Yes.
Like he talked about the rebound for travel to be of epic proportions. And so Airbnb's business model is one that, number one, again, another example of best in class, given reopening, COVID, all that other stuff, like people are still have those people. I feel like people still have that like feeling of like not necessarily wanting to be around like big groups or whatever. And like, would you rather be at a hotel or Airbnb? Right. Maybe some people will be in a hotel, but overwhelming majority of the people that I talk to want to be in an Airbnb. And it's a better experience. Their business model is just better. The only thing I wish Airbnb would do, and this is just a side topic, I wish Airbnb would do a rewards program, because if they did a rewards program, you'd get more business people doing it. Yeah. And that would set it off.
So I think that they talked about some of the things that they're doing to revamp and really kind of give an overhaul to Airbnb from the technology side of things. And they didn't really go into great detail as far as what exactly they were doing, but they said it was going to benefit, users, but is also going to benefit the renters,
The host.
Sorry, that'll benefit the host the most, and make things easier.
The host of the most.
Yeah, make things more easy and streamlined than ever before. And I think that could potentially be a game changer for them too.
Yeah, I mean, and they've talked about their pent-up demand, and they're providing incentives for to bring on new hosts because the supply isn't there. But again, that's a good problem to have, and they're going to come back. I think Airbnb is a great opportunity. Looks like a great asymmetrical trade opportunity with some huge upside.
So I want you guys to take a look at the chart here a little bit. And we're taking look at the chart of Airbnb, and some analysts argue that Airbnb is overvalued still. But look at Expedia. I mean, it's the same industry, and Expedia obviously is involved in the hotel side of things as well. And it's not a direct competitor, but it is a competitor nevertheless. And it hasn't faltered at all. I think you look at Airbnb, it's trading 10 times sales as we sit at $134 a share. Tell me that you can't see us working our way into that multiple. I think that we can, and I think that we see explosive growth over the next quarter and a half. They talked about in the last earnings about how 60% increases in searches just from old people.
Yeah.
And those are old people that don't use technology like young people. So I think that this is just something that you just have to be patient with. And as we've talked about with this theme of the night of looking into some stuff, can it go lower? I think it can go lower. There's a possibility of that. Let's not mistake that at all. But I think when you look at just what's going on in the industry and the company itself, and as foreign, we haven't talked about even just foreign nations or foreign countries that are starting to open up, and they're actually behind the U.S. So I think if we look at it domestically and as a precursor to what we can see globally for Airbnb, they still have plenty of room to grow as far as just reopening in general. The pent-up demand is going to be insane for international travel as it is for domestic. And so if we start to see those domestic numbers come out, it's going to be wild, man. I just think that Airbnb is going to take some patience, but I agree. I think this is going to be something that's going to be pretty awesome.
Anthony Casta, I want to push back a little bit because he says hotels have free breakfast. Some of them do. Pools, no maintenance fees, no cleaning fees, and a lot cheaper prices.
Yeah.
I'll start at the end. Do you think hotels are a lot cheaper pricing than Airbnb?
No, not at all.
Like, there are cheap hotels, but if you look at the quality, like compare Airbnb to like a Hilton or probably a little bit higher end, like a Starwood Resorts, like a Westin, right? Yeah. Not cheaper. I don't know. I don't think that's the case. Best Western is cheaper, but it's not quality. That's not apples to apples.
Well,
But let me just finish.
Okay, sorry.
So, cleaning fees, maintenance fees. Airbnbs have pools,
right?
So to say that pools, like not every Airbnb does, but if that's what you want, you can get. I think you'd be surprised. Like, that sounds like maybe you haven't looked into Airbnb that much because their pricing is very, very competitive.
Yeah.
And if anything, I believe they're more transparent in their pricing than hotels because hotels, by the time you are done, they have resorts fees, they have taxes, like they have the same fees. You're going to get hit one way or another. So the cleaning fee, I would say, is probably a valid argument. But that's also a flat rate, whereas hotels, that's a daily rate.
Yeah.
Go ahead.
So the other thing is that what you get with an Airbnb that you don't get with hotels is the experience. When I walk into an Airbnb, it's usually somebody's home that they've welcomed you into. And now there's some other people that just have properties and they treat them as if they're hotels and whatever. But like the personal experience that you get like just context, places to go, that sort of thing. When I walk into a hotel, there's a Bible on the nightstand and that's about it. There's no welcoming feeling about a hotel. When I walk into somebody's home, I feel like I'm actually welcome there and like they're allowing me, to experience their home and just their area, and they actually enjoy where they live.
Yeah.
And so when you get that from somebody whose home you're staying in, it's much different than a hotel because they don't take pride, I guess, into that location like somebody who actually owns a home does. You know
what the biggest thing not the biggest thing, but one of the big things I look for when I'm looking at Airbnb? Wi-Fi.
Well, yeah,
and we think about the remote work.
Yeah.
Hotels, like you have to pay for premium. You can get the regular Wi-Fi, but it's usually not that great. I couldn't stream on regular hotel Wi-Fi. Right. Not saying everyone has great ones, but like you're right. You get a home, you get to feel comfortable. I've went to Airbnbs. I've cooked. I've lived there. I've lived there like it was my own home.
Yeah.
The business model is awesome. So I like it.
Needless to say, we like Airbnb. So as far as my next one's is concerned, it is AMD. And folks, we have two semiconductor plays on this list. And AMD just announced that this is unprecedented, a repurchase program over a unspecified period. They didn't say exactly how long it was going to take them to do, but it seemed as if that this was going to be rather quickly. But they're going to do a $4 billion buyback of their shares after it's already been beaten down, after everybody and their mother continues to talk about a chip shortage. I think AMD, we shouldn't have done those back to back. I think AMD is going to be something that
AMD or AMC?
AMD. I think AMD, we look at the chip shortage issue, and it could have, I think in my opinion, the way that this has come down from, their $90 highs, I think that we look at this and the chip shortage issue could finally be priced in. And so that's kind of where I think that AMD could be a really good turnaround here, or for potential turnaround here, as long as we don't run into any other issues with the chip shortage, as long as supply chain issues don't continue to become a problem, which it seems as if they're starting to turn around. So we look at the chart and we could start to see this bottoming out at 7250, which it's held this support remarkably well. I mean, we go all the way back to November, and it held the support here and continued to make that move up. And then you look at back in March and even April, it's held above the 7250 remarkably well and has bounced off of it yet again. I think that, in my opinion, with the buybacks taking place, it's already had some pretty strong moves over the last couple of days, including last week. And I think, in my opinion, with the shortage issues being priced in, that this could be something, in my opinion, that probably could be worth starting to work your way into yet again.
Was that your opinion?
Yes.
Okay, cool. You said. I was just curious.
Did I say it a bunch of times?
Yeah.
I do that all the time.
I do the same thing. It sounds funny when you don't realize it.
I know.
But in my opinion, I like
that being
AMD.
said,
the next stock I have is Nvidia, and I should say these two can live together.
Yeah.
And I think they're actually kind of establishing their own sort of home separately. And Nvidia is best in class, fair to say.
yes.
But they seem to be taking two different approaches as their growth strategy. And
Yeah.
so it could be an Apple, Google, right?
Yeah.
An Apple, Microsoft, where they can both see success. So Nvidia's, for me, they actually have earnings after hours on Wednesday. This could and should be a record earnings. They have estimates at $3.27 a share. I think they beat it handily, coming at $3.76 a share with their best quarter in the history of the universe.
Yeah.
Now, for them, their universe. But this is another one. It's made a little bit of a comeback, so maybe this isn't fair, but I think the upside is really huge on this. I'm most excited for their blockchain exposure. They've recognized the value of blockchain, the value specifically of Ethereum, and I think we're going to hear a lot about that in this quarter. I'm excited about it, and I think that they're going to be the big dog in blockchain as far as publicly traded companies in the semiconductor space, and I think they're going to continue to make inroads, not just with Ethereum, but other cryptos. So we'll see what happens.
Yeah, man. And we look at the chart. We talked about Nvidia being a $600 stock, but I know it went down in the 450s. And I never thought that we would see an opportunity below 600 again once it finally broke up over that and got to 650. So that being said, I think that this is still very much a $600 stock. And for all the things that you have mentioned, plus we didn't even talk about the autonomous vehicle side of things, which obviously the chip shortage, we know the story. But when you look at the way that this has started to move again, I think that we could safely say that the bottom here could potentially be past us as far as Nvidia is concerned, as far as AMD and the chip shortage issues in general. So I agree. Anything under 600 is probably going to be a good buy for Nvidia. I think also this is another one where we just talk about like Apple, right? You just own it, and that's just it. You just buy Nvidia wherever it's at, and I think if you got a longer term approach on this, I think that you'll be in fine shape.
The N in Fat Man Zoom is not Netflix, people. It's Nvidia.
It is.
Remember that.
It is. All right. So for me, my last one here is going to be Square. Square has been one that has just, I guess, been a cash machine. When you look at it, every time it comes back down to $200 a share, you're just like, I just start licking my chops.
Yeah.
So it's come down and retested 200 multiple times, and then had these crazy wild swings all the way up to 250, 270, 280. And I think that this could definitely be another opportunity here. Have you heard of their kitchen display software that they just came out with?
I have, yeah.
Or not just come out with, but they're expanding upon that. It's pretty wild stuff. So if you guys aren't familiar with it, basically when somebody makes an order, as far as bars and restaurants are concerned, it goes straight back to the kitchen. It's all streamlined, and I'm sure you probably can speak to this a little bit more too, since you seem to be familiar with it. But I think that the way that they have continued to expand this and work their way in as far as market share is concerned and attach it to the cloud, I think the cloud's just going to continue to be the factor here across all technology, but they've been able to really attach themselves to this. And this is something that we haven't talked about a whole lot. Everybody wants to focus on their Bitcoin investment and all that good stuff. And we've talked about the POS systems, but haven't really talked about how efficient they can actually make your business, especially from a hospitality standpoint. And with people going back into the bars and restaurants, this is only going to continue to do well for them as another revenue driver for Square.
Yeah, and if you look at anybody that's familiar with hospitality, when you look at hospitality, you actually, if you like, think about when you sit down as a customer, like there is a huge difference between the new school POS systems and the old school POS systems. And the old school, we'll just call them pieces of shit, because like if you look at what like Bank of America gives you as far as like a credit card processor, and the difference between that experience and like a Square or a Toast or Clover or whatever. Clover's a POS system also, guys. But if you look at those, it's just different. It's just like night and day different.
Yeah.
And their technology is a lot better. And one of the pain points of hospitality is front of the house, back of the house communication. And historically, it's sort of an antiquated system. So if the technology they bring to the table bodes well, and that's their entry point into the business. But let's get it straight. What they're trying to get is the merchant processing, and with their technology, you can't use somebody else. So if they can get you to use their product, then they can get you on the hook for merchant processing. Now, that's where the POS is. I don't know if it's necessarily true for the kitchen, but if you use it, you love it, more likely you're going to use them for other services as well. And their products are good. And so I think that's the one thing you're right that people keep kind of forgetting about, is like, well, they crushed it during the pandemic and they're going to keep crushing it. Well, like they also have a huge exposure to hospitality that now is going to be rejuvenated. So there is still a lot of opportunity.
Yeah, so their latest updates featured with ticker timers, alerts, performance reports, and unique kitchen solutions, which are helping the company to cut costs, operations, and labor, which we know that the hospitality industry, the margins are razor thin. So if this helps them out, then obviously they're going to continue to use it, which means more money in Square's pocket. So we look at the chart here, and like I said before, the test here at 200, it briefly dipped down to like 195. So I think obviously $5 margin of error here, but I think this $200 mark has been just a really key, crucial support for it. And I think that this could be another good opportunity for Square if you're looking to either hop back in or average into your position. I think that this $200 mark just makes a lot of sense when you look at it from the chart's perspective, and for the reasons that we've talked about it fundamentally. We like Square. That's all we can say about it.
All right. We are here to number 10. And ironically enough, somebody just made a comment about this stock. But first, I just want to invite people to the Chaos Crew. If you guys don't know, there's little bulls and bears next to people's names. That's the Chaos Crew. We send out a watch list every day that the market's opening. Pre-market, we send out 5 stocks that we're watching, technical analysis, a little bit of a write-up. We have a Discord community, which I think is the biggest piece of that, is our Discord community, where you can chat with us, join us, get access to Brad's public portfolio. So if you guys are interested, click the join button next to the chat. Number 10. You ready?
Yes.
I switched it up last minute. It's Alibaba. Alibaba is number 10, and I will say potentially the most speculative, only because we don't know what happens with China. China is just so fickle, and not only U.S.-China relations, but Alibaba's relations with China. And those are sort of two factors that will be interesting to see how that plays out. But that doesn't change the fact that this company is a cash flow machine.
Yeah.
And it's beaten down over 30% off its highs back in October. I was just looking through the fundamentals of this. Price, the PE is 25, industry's average is 44. And I was looking at profitability. EBITDA's 30.7 billion, industry average 13 billion. But the other percentages are what really stood out to me. Operating margin 19.5%, industry average 6.5%. Profit margin 29.3% for a company that's $500 billion. That's insane.
Yeah.
Industry average is 7.2%, Brad. And gross profit margin is 43.4%. Industry average is 34%. Those numbers are phenomenal. They have cash. They've fallen out of favor, but these are opportunities. And I think Baba goes below 200. Dear Lord.
Yeah, man. And you look at the chart. It is ugly. Like gap ups, gap downs. It's all over the place because there's been so much drama with the Jack Ma. I mean, we had T-shirts that said "Free Jack Ma" for crying out loud, because of all the drama that's been going on with the Chinese companies and China, and how they're related to the U.S. I think that you definitely are right. I mean, I just think that the amount of cash flow that's coming in and the amount of business that they're generating does rival that of Amazon, and is getting close as far as the Asian markets are concerned. You look at the chart, it's all over the place. I don't even know what to tell you guys as far as where to start, but this $200 mark, to your point, could be a really good spot to accumulate some shares. If you're feeling lucky, and you're willing to take some risk, I think there's definitely a lot of upside to this. And to your point as well, the asymmetrical side of it makes a lot of sense. The risk reward here, I think, is what we want to look at. And I think that the risk seems to be relatively low, and the reward here could be extremely high and upwards of 30-40%.
It's not a crazy statement to say that Baba should be $1 trillion company.
No.
And right now it's at $500 billion.
Yeah.
Like that speaks to where it should be and where it could be. But it's gotten beaten up, and are you willing to sort of handle a little bit of a pain? But like a stock that's been beaten down like this, I'd rather get into something like this than something else that's way more speculative. The company's not speculative, the situation's speculative.
Yes.
It's worth the risk.
Yeah, I think it's definitely worth the risk as well. If you guys are willing to expose yourself to a little bit more risk, this definitely has a lot of upside to it for sure.
And there you have it. Our top 10 beaten down tech stocks.
Woo! That felt like
that
a
was
workout.
Great timing.
Yeah.
It's long. I mean, we're at the end. Anything you want to add or bring up or talk about?
No, I just wanted to, mention that these stocks, again, just kind of reiterate for those of you who maybe showed up later, that these are not stocks that we're thinking that are just going to, rock your world tomorrow or next week. But we just think that these are some potential tech stocks that are very, very good companies that have gotten beaten down. And there's potential that they could continue to come down. But we think that with the amount that they've already sold off, the upside here could be pretty good. And we're trying to find, companies that are in their industry are best in class. I feel like we did a pretty good job of that. But let us know in the comments as well. What do you guys think? Which ones would you like us to take a look at? Which ones do you think that we missed? I'm sure there's plenty of them. Did we mention one FANG stock? I don't think we did.
No.
Didn't want to mention one FANG stocks, but the FANGs are in there as well. The reason that we didn't mention FANGs is because they didn't get beat down as much as some of these other ones.
And they're obvious. We almost threw Amazon in there. They're fairly obvious.
We had Facebook too, and then we took that off. So, I mean, I think that if you're looking for some upside, you want some more exposure to tech, you think that you're going to start to, if you start to feel comfortable about moving into some of these, I think that we could start to see a little bit of a move back up. And we started to see that this week. Hopefully we'll see if that continues. Yeah, guys. So remember, like and subscribe. Check us out here. We'll be back tomorrow on the live stream at the closing bell, 3:30 p.m. Eastern time. We're probably going to be talking crypto tomorrow. Crypto is going to be very much on the topic of conversation. Yeah, we'll see if Ethereum's below 2,000 and if Bitcoin's below 30,000. Can you believe Ethereum's down 50%? It's wild. In like 2 weeks. It's wild. Yeah. I may add, but I'll let you guys know tomorrow what I do. But that's all I got, bro. All right. That's going to do it for us, guys. If you want a free watch list from us, hit the link down in the description. We actually put a watch list out every single day of the week it's in depth, 5 stocks before the market opens. So if you like these stocks that we put out for you guys today, we do it every day. So if you go to ownthechaos.com, the link is in the description. We'd love to have you guys as a part of the crew as well. So make sure in the join next to subscribe, you get access to the Discord, trade alerts, all that good stuff. And we certainly would love to have you guys there too.
Bye.
That's going to do it for us, guys. We'll see you tomorrow.
Week.
We'll see you tomorrow, 3:30 p.m. Eastern time.
Next week, Triple C's back.
Yes. See ya.